Hey my friends, welcome back to the channel, 0x Nephew. Alright, so in this video we're going to talk about the ultimate guide on how to invest in cryptocurrencies. And this because a lot of people have been asking me for the basics as to how to get into cryptocurrencies. If you are new to cryptocurrencies, or if you are fresh or just want to learn more or about it, then this is the video for you. And I just want to start by letting you know that I'm not a financial advisor. I am just a YouTuber, but I will do my best to give you as much information and help you get on your way and on your track to doing your own research for yourself. Cryptocurrencies are extremely risky and you could lose money when you're doing them. So I just wanted to disclose that. But we can go ahead and get started in talking about cryptocurrencies, because right now we're in what everyone's considering a bear market. And this is the end of 2022. We're going to be going into 2023, and just want to let you guys know that this guide, depending on when you listen to this guide, this will still be relevant. I'm going to try to make this guide in a way where it's still relevant years to come, because it's going to be covering the basics of cryptocurrencies, the things that I learned in the very beginning when I first got into cryptocurrency, different types of cryptocurrencies, and how to actually pick cryptocurrencies, how to do the research and educate yourself on cryptocurrencies. We're going to be talking about how to determine your investment strategy. We're going to talk about choosing a cryptocurrency exchange. That's going to be a hot topic for you guys. Also, how to set up an account to complete the necessary verifications, how to transfer funds to an exchange, how to choose the cryptocurrencies you want to buy, of course, and how to place your first orders. As well as we're going to show you how to secure your investments and how to monitor your investments, and show you how to consider, more diversification in the future. So this is going to be the ultimate guide from start to finish. I'm going to show you guys exactly how to do all that. I would have broken all this up into multiple videos, but I figured it'd be easier to just have it all in one place so that you guys could jump from, one chapter to the next. In the bottom, there's going to be chapters so if there's anything you don't want to hear, you can always skip to that point. And so hopefully this guide is very valuable to you. So if you find value in this video, make sure you smash the like button. Don't forget to subscribe to the channel and drop us a comment. All right. So before you really get into cryptocurrencies and dive into it, you want to learn more about the technology. And I'm assuming a lot of people are just brand new to this and they just really want to get involved. You want to know how to invest in them so you can take advantage of these financial opportunities moving forward. You don't want to miss out like many have before. Also, you know what? I'm going to tell you everything about this page right here, CoinMarketCap, in just a minute. But I don't think I want it to be bright like that. All right, that's perfect. Now that's perfect. It's so much better. All right, so I want to help you with researching and educating yourself on cryptocurrencies. This will include learning about the different types of cryptocurrencies, the underlying technology, and the potential risks and rewards. It's important to thoroughly understand what you're investing in before you put any money into it. We're going to also start by looking at this website right here, CoinMarketCap, and we can see that there is 22,114, I'm highlighting it right here, 22,114 coins or tokens registered to this platform. Okay, and now for the last 10 years, I've used CoinMarketCap as a way to investigate, research, and learn more about tokens in a central location. That's because most of the data is available on the coin page. So make sure you guys bookmark this CoinMarketCap website, as this will be the most useful tool going forward. So I'm going to give you a rundown on how to use this site and how to use it for research. There's going to be a lot more types of research, and there may also be other videos linking to this guide that will also help you in, when you want to dig deeper into research. But just for the basics, that's what I wanted to focus on in this video, is the basics. So we're going to go over the basics. So if you see at the top here, you got, how many cryptos there are. There's also how many exchanges there are. All right, so it's 533 exchanges. You can see the market cap of the entire cryptocurrency market, and it's around 811 billion. This is less than Apple is worth right now. You can see the 24-hour volume is 16.2 billion in volume, and the dominance is Bitcoin has 39.9% of the dominance. Most of the market cap of the whole crypto market is in Bitcoin, as far as 40% of it being in Bitcoin, and 18% of it is in Ethereum. So these are your top two coins. And then at the very top, it just shows the Ethereum gas fee, which makes a difference between, because Ethereum has the most expensive gas fees. And I will explain gas fees and all that stuff in a little while as we move forward. So let's just go over the research basics. So we're going to start with Bitcoin. So on this website, if I were to, if I want to click Bitcoin, it'll take me to the Bitcoin page. But before we do that, let's just check out the different cryptocurrencies and the categories. You got your DeFi, you got NFT, metaverse, all right? So you got just different roles here. If you click on categories, then it'll take you to different, types of coins, from the BNB ecosystem, the CMS Holdings portfolio, Polka Starter, the Alameda Research portfolio, which will probably be getting removed soon, so don't look at that. But you got your yield farming, your storage coins, you have your internet computer ecosystem, you have wrap tokens. All this might seem a little intimidating right now, but I'm going to break all this down later in the video, so don't worry about that. So let's click on Bitcoin and let's move into the basics. All right, so let's talk about Bitcoin. Bitcoin is by far the most advanced technology as far as the payment system that's coming out in the latest for us. We have finally a coin that can self-verify transactions, and that is the reason why Bitcoin is so valuable. Right now, you have to rely on banks to validate transactions, so you won't have a double spend. If I were sending you money, a bank would have to verify that that money was really there and that I actually sent it to you. And the bank is the centralized entity that is controlling the verification. But with Bitcoin, Bitcoin is decentralized, meaning that there is no bank or a human being that is behind it validating anything. So the miners and the actual nodes are validating Bitcoin transactions, and that's done through a mathematical algorithm that was invented by Satoshi Nakamoto. Okay, so Satoshi Nakamoto, whether that's a person or a group of people, invented this algorithm to allow Bitcoin to be able to self-verify transactions. And that is when this internet commodity took off. There were a lot of would-be Bitcoins prior to that, but they weren't decentralized and they couldn't self-verify. So he solved those two problems. And then we have the blockchain technology that eventually rose to become this ledger that is a public ledger that allows everyone to see the transactions and be able to verify the transactions on their own. All right, so here you can see the price of Bitcoin. You can see the low for the day, the high for the day. This is within a 24-hour period. But if you click here, you can also click that year, like a time frame, to see what was the low of the year. The lowest in 1 year that Bitcoin has been is $15,599, and the highest was $51,956 within 1 year. So obviously it hit higher than that, but that was obviously more than a year ago. So you can see the market cap of Bitcoin here, the fully diluted market cap, the volume, and the circulating supply. Now, I want you guys to remember this circulating supply, because as we go through researching different coins, and I'm going to show you the values of coins and things, the circulating supply, the max supply, and the total supply, along with the market cap when the coins are all available. So a lot of the Bitcoin coins right now have been lost due to people, negligence, mishandling of Bitcoin. You will never get those back if you lost the codes or if those were lost. So those would come out of this supply. The only ones that are actually available are the ones that people have access to. There's only ever going to be 21 million Bitcoin. We won't never know who lost what or how many are actually circulating at any given time, because we don't know who lost Bitcoin or if someone passed away and took the Bitcoin to the grave. All right, let's go ahead and look at a couple things that we look at when we're looking at cryptocurrencies, just so you can have an idea. Here's the chart here that shows the price. You could obviously zoom out and you can see bigger time frames. 1 year, you could just see that Bitcoin's been going down in this slanted angle. Now this chart basically just shows Bitcoin. Looks like Bitcoin's doing pretty bad, and you can hit the all button and then you can see that for the most part Bitcoin has been up this high and has been now down this low, which is still higher than if you would have had gotten in at this price or 500 or the 4,000 or 11,000. And so these cycles that happen every 4 years or so. These cycles, the Bitcoin price goes up, hits a peak, and then blow off top, and then it comes back down, and then it goes sideways. And these times where it comes down is the bear market. The times where it goes up, these are the bull markets. So on the way down, then you have the sideways accumulation, and a point where people are either slowly buying more or basically getting ready to capitulate, which means that people are selling the Bitcoin, and finally we have this dump here where eventually Bitcoin just totally drops, and then from there this is the bottom. So you could say, well, this was the bottom, 3,200. So at some point Bitcoin went up to 19,000 and then came down to 3,200 and then decided to go back up and went back up to 12,000, but then come back down to 5 before making the massive bull market gains of 2021, which at this point went from like a 5,000 all the way to a peak of 63,000 or even 64,800, just to finally come back down again to where we are today at $16,842. So there's a lot of people who might believe or think that, going forward, Bitcoin's never going to recover. These market cycles, they happen in both the stock market, they happen in real estate, they happen in oil, they happen across all commodities, all markets. They go up, they go down. So that shouldn't be something that scares you away. This is just how they go. But it's up to you to do the research to know more about the benefits of why you would want to be, accumulating during a bear market when the price is at its lowest point versus trying to buy at the top of the market, which is what most people do when they lose money. So obviously when people are losing money, that's because they're buying way up here and then they're holding all the way back down. So moving along, as you scroll down, they have here information about the coin, and we're going to go over the white paper as well, what a white paper is and why you need to learn more about the white paper on a cryptocurrency. When you go down, you can find out the information here, the story behind the coin or the token, and what makes it unique and things like that. Also, very important information at the bottom here would be the exchanges that you can, who actually carries the currency that you're looking at. So when you come all the way down here, you can see Binance is #1 marketplace for Bitcoin. Then there's Coinbase Exchange, it's number 3. Number 4 is KuCoin, and then followed by Kraken. All right. And if you hit see all markets, you can get a big list of all the people who have this. Now I'm just letting you know now, all exchanges should most likely have this in there because everybody should be trading Bitcoin. The other thing is that you have the pairs here. Pairs just shows you what they're trading in. This is BTC trading against USDT, which is United States Dollar Tether, which is a token that stays at $1. It's a stable coin. And what a stable coin means is that it's supposed to trade 1-to-1 with $1. So it always stays the same price. It tries to peg itself to $1 versus a coin that tries to go up and down in value. A lot of times when people are trading, they're buying Bitcoin with dollars. This Bitcoin price right here is represented in the dollar amount of the Bitcoin price. So that means if you had $16,828, you could buy a whole Bitcoin. Also, whenever you sell the Bitcoin, you would get 16,828 Tether stable coins because those represent $1. So when you were to sell those or trade them back in, then you would get $1. So keep that in mind when you go to the exchanges, that you're going to be trading coins that represent $1, not necessarily going to be using the dollars. Now, with certain exchanges, you are actually just buying the coins with your dollars and then selling your coins back into dollars. So it really depends on which exchange you're exchanging with. Coinbase is a simple exchange. This one says BTC/USD. So that means United States dollar. In this case, they're not doing Tether stablecoin, or they're not doing euro. They're just doing the dollar. Whereas if you were in Europe and you wanted to trade Bitcoin, you would actually be selling your BTC for euros. So this is the website, like I said, that we get most of our information from. You can check your historical data, check all the prices. You have your news feed here. This isn't all the news, but this is some news. You have price estimates, stuff like that. Okay. So this is Bitcoin. So we can go back and check out Ethereum, and Ethereum has its own story, and you can kind of see the same information. Okay, so you can see the price of Ethereum, once again, the low, the high, the market cap, how many coins are circulating, the market cap, the volume that is trading at. You can also see here the contract addresses and who audited the contract, and once again the white paper. So let's talk about the white paper now. What's important about the white paper is that it highlights the developers' intentions on why they even made the coin in the first place. As it says here, a document is released by a crypto project that gives investors technical information about its concept and a roadmap for how it plans to grow and succeed. These white papers will often have all the information that you need to know about the project. Back in the day, at least back before I really got, deep into crypto, we started reading the white papers when we first got started because we didn't know which one of these coins were going to do well or not. And since we didn't know, we wanted to know what was behind the curtains. What is the magic trick here? What is the technology that underlines the reason why I should be buying this actual coin? Like, why am I buying this, right? So here's an example of some white papers. One of the most famous cryptocurrency white papers is obviously the Bitcoin peer-to-peer electronic cash system. So this was published by Satoshi Nakamoto in 2008. The Bitcoin white paper proposed the following: that a peer-to-peer system for payments across an online network, that it was going to be removing third parties and replacing them with verification. Third parties meaning banks. Transactions would be irreversible. This means that these are one-way transactions like cash, but yeah, basically you needed to trust whoever you were paying, or else don't pay them because you ain't getting the money back. A P2P distributed timestamp server, which is the ledger. This would generate mathematical proof of an order of different transactions. So therefore they would have a ledger that is keeping track of every transaction. As time went on, other coins came out. You'd have your Ethereum white paper by Vitalik Buterin, which laid out the technical specifications for the Ethereum network, which is now the second largest cryptocurrency network. The Bitcoin Cash white paper, also the Litecoin white paper by Charlie Lee. I'm going to leave a link in the description as to how to read and analyze a white paper, which is here by CoinMarketCap. I'm going to leave this in there. And this is more for your research and for you to learn more about it. But basically what you want to do, and I can kind of just go over this one quick thing which matters the most for what we're talking about in this guide, is that you want to look for the reasoning behind the project. That is what you're looking for. The purpose for why they're even making this coin in the first place. So as a joke, just as a gimmick, Dogecoin had a white paper, but almost to no extent it was a joke and it didn't actually matter. They actually invented the coin to joke around, and it was a meme. As time went on, the coin became fun, simple, and it onboarded a lot of people. So eventually the coin's purpose was really just onboarding people into cryptocurrency and giving a lot of people the reason to finally own a coin. And because it was extremely cheap, it was easy to get. And then, Dogecoin started getting themselves into ATMs around the world in different places, and different use cases. So we'll talk about that, a use case. So the reasoning behind a project, its utility and use case, the blockchain architecture behind it, the token distribution and utility of the token, a roadmap, and the team. All right, so what this basically means is that the utility is, in this case, what it actually does, why it's there, what it's being invented for. So in my mind, most of the coins were invented to, kind of enhance an industry standard that's already now in practice, but now we're decentralizing it, making it so that third parties don't have full control over something, or to allow governance over something, to allow people to invest in that something. and give people a chance to own a piece of something. In that case, that something might be Web3, or that might be the Bitcoin network, the Ethereum network. So these are networks that are not owned by, Zuckerberg, or not owned by a single entity. That makes it centralized if it's owned by one person or owned by one corporation. But when it's decentralized, it's owned by the people, and the people control all the assets and own all of the versions of that token. And that ownership of that network gives them the power to vote, power to govern the network, and also allows them to earn value, or that becomes an asset in itself. The more people use the network, the more people gain value. So in this case, a use case in Ethereum, people would like to buy and sell NFTs. And these NFTs are non-fungible tokens, but what they represent might be art or data or a video or a book or audio book, but it's in the digital form, and it's decentralized so that it doesn't have to sit on the iOS app store, and you don't have to pay Apple to download it. You don't have to pay a central party. You just have to pay your Ethereum gas fee to make the transaction. And then that goes to the distributed people who own the network, who run the network, and is also burnt and distributed between all the other users. Use case is what the coin does and why it's been invented. You want to know the architecture behind the coins, but most people might not care about the actual magic tricks that are being performed behind the curtains, and that's understandable. The token distribution, which then is like, well, who owns what? Like when they made the token, how many people own the coin, who got the coins when they first launched? That matters, because if someone launched a coin and own most of the coin, then it's not decentralized. If someone launched a coin and they distributed it in an even way, then that's better. You also want to know about the roadmap, which then just tells you more about like what direction the project is going in, and like as far as where the project is headed, what they intend to do to grow the project. That's more for projects that have just fully launched just recently. And recent projects usually have this roadmap, they usually have use case, they usually have utility. Now I just want to also say that scammers also know these things. Everything I'm showing you guys in this video, scammers know the exact same information. So they also know that what they are, all they have to do is create a token, create a roadmap, okay, create a utility, just make up one, and create a use case, just make up one, and then convince you that this is what they plan to do, and this is why you should invest. That is the recipe for disaster when it comes to investing in coins. And the reason why I'm making this video is to show you, one, how do you know which one of these coins out of the 22,114 coins are actually not scams, and how do you know the difference between the ones that you should put your money into versus the ones that you should not put your money into. That's why you need to educate yourself more on cryptocurrencies. This video wouldn't be able to really give you all the information that you need to know about every single cryptocurrency. You're going to have to take, weeks, months. It took me years to learn everything I did about cryptocurrencies. And you're going to have to study each and every single one of these blockchains and understand what the technology is being invented to, what problems it's being invented to solve. But we can, however, put these coins into baskets. Let's talk about the baskets. So there's going to be 4 types. I'm just going to drag this over to you here. All right. So we're going to talk about these types of cryptocurrencies and main types. All right. So that you guys can clearly look at this list and just be able to know what is what. When you're looking at this, I want you to understand that one of the types of cryptocurrency is called a payment cryptocurrency. What a payment cryptocurrency means is that its purpose and invention was specifically to pay people with it. And that would basically be your Bitcoin. Okay, that would be your Bitcoin, your Dash coin, your XRP coin. That's for specifically for payment. And Litecoin. Litecoin's a payment coin. So when you go down, you can see that that's what those are. All right. Now we're gonna go into utility tokens. A utility token, like I explained before, is a token that has a purpose. It does something. What is it that it does? That's something you gotta understand more in the purpose of it. Obviously, some of these coins touch on different baskets all at the same time. Some tokens actually have more than one of these. They're not just one. So you got your payment cryptocurrency, you have utility, you have your stable coins, and you have your CBDC. As an example, Ethereum's a utility token. And it's a utility because it's an operating system, smart contract operating system that a lot of other coins are being built on top of. Whereas Bitcoin's not that. Bitcoin doesn't do that. Bitcoin's just specifically for payments. And it's also store value. It holds your value very, very, very well. So that's the utility behind Bitcoin, is that it's just built to hold value. So if Bitcoin is digital gold, then Ethereum's a utility token. What does that mean? Well, they intend for Ethereum to be something more like oil, where it's the lubrication, it's what makes the engine turns, it's what it's needed across multiple networks. All these different coins that are being built could possibly be built on top of Ethereum. So coins like Ethereum are like Cardano. Polygon is a coin built off of Ethereum, so it has the same purpose. Polkadot is another type of coin just like Ethereum. Solana is another coin built just like Ethereum. Avalanche. So most of these coins at the top are all based on the same principle of being smart contract coins, which allow you to build programs on top of them. Then here's your stable coins. Tether, here's your stable coin. USDT, this coin stays at this price right here, 0.09999. Basically $1. This one, another stable coin, 0.99999. So that's another stable coin. USD, Binance, $1. BNB is another Ethereum type coin. So that's another program coin that allows you to build contracts on top. Just by looking at this list, you can see that I can break this down into payments coin right here, system, this is a system, let's just call this a utility token, stable coin, utility token, payments, okay, this is payments again, XRP. The XRP was invented to do like what Swift does, and Swift is like the payment system. It's supposed to move money around the world faster than you know, the bank can do it. So settlement payments move extremely fast. If you ever use XRP, you know what I mean. It goes extremely fast. Doge is another payments coin. Polygon is another platform, smart contract platform. Cardano is a smart contract platform. DAI is a stable coin. Polkadot is a smart contract platform. Tron is a smart contract platform. Litecoin is another payments coin. Shiba Inu is a payments coin. Solana is a smart contract platform. Uniswap is the exchange, decentralized exchange coin. So what it does is it is actually a decentralized version of Binance. So here you have Binance, you have your Coinbase, your Kraken, your KuCoin. These are exchanges where you can buy and sell cryptocurrencies. But with a decentralized exchange, which in this case is also considered to be a DEX. DEX just stands for decentralized exchange. So with DEX, you have your coins here, DYDX, Uniswap, Curve Finance. These are all different decentralized protocols. So when you go to a decentralized protocol, what you are able to do is you're able to basically buy and sell coins directly from the network without having to have permission. You can just connect your wallet and then you can go ahead and make a purchase. So here you would connect wallet. So your Coinbase wallet, your wallet connect, you connect your wallet and then you can choose your coins here. So you see how you can choose coins. And then let's say, for instance, you wanted to do a stable coin. So you choose stable coin. If you had, 23 Ethereum, then it would tell you that if you were to exchange this 23 Ethereum right here for USDC, you would end up with $28,000 worth of USDC, and that it would cost you $1.58 in gas fees to do that. And then you can just hit the button and hit exchange, and it'll take the Ethereum and then turn it into USDC. You could also take, $1,000 worth of USDC, and buy Ethereum with it. So if you only had 1,000 USDC, you could only buy basically 81% of an Ethereum, 82% of an Ethereum, because Ethereum costs $1,220. So if you had $1,222, you'd get a whole Ethereum. So this is a decentralized exchange, and what this means is just that I don't have to put my identification. I don't have to show who I am. I don't have to fill out any forms. I don't have to do anything. All I have to do is connect my wallet, And these exchanges exist in a wallet browser. They exist in your wallet. So if you have a Coinbase wallet, if you have a Trust wallet, or any kind of KuCoin wallet, or anything, the 1inch wallet, these wallets have capabilities of doing exchanges inside. But an exchange like FTX or Coinbase, those type of exchanges are centralized, meaning that there's a person behind the ownership of the whole exchange, and they run that whole exchange. They control when you can withdraw your money or not. So with a decentralized exchange, let me give you an example. If you had your coins in your wallet during the FTX crash, when everything was going down, everybody could not remove their money from the exchange. But if you wanted to just get out of Ethereum at that time, because you were in Ethereum at that time, and you had 3 Ethereum, you wanted to get out of it, if it was just sitting in your decentralized wallet, you could have easily come over here to Uniswap and sold 3 Ethereum into USDC to protect your value without anyone's permission. You don't have to have permission. It was your coins. You could have made the exchange right here. And that is the power of decentralized exchanges, that no one owns your coins, no one has your coins, only you have your coins. That is one of the things that you want to be able to have access to, is the decentralized exchanges, so that you don't have to always trust these exchanges that are not decentralized. Okay, decentralized exchanges will always have inherent risks of having some type of bank run where they lose their value and all of a sudden you cannot remove your coins. Okay, so they say not your keys, not your coins. It just means that when you have these coins, you need to have them in your own wallet, and we're going to touch on that in a brief moment. So up until now, I hope you guys are following along and learning about how to research these coins, what they mean so far. Obviously, there's so much more that I can show you guys, but I wanted to make this guide basic and straight to the point so you guys would have an idea of what to look for. Now, if you were going to go down further into the list, you start running into coins that aren't exactly fitting that category. So Uniswap is a decentralized exchange coin. Chainlink, on the other hand, is not a decentralized exchange. So let's go look at Chainlink and figure out what is Chainlink and what does it do. So in this case, we would go to the white paper. I'm just giving you an example of how I would research the coin. And the reason why you want to do this is because, look, this is rank 21. So this is doing a pretty good job at being up there on the list. You could imagine that coins that are at the bottom of the rank are dangerous, extremely risky coins that may or may not ever grow, but then they also pose the chance of being the highest potential for earnings. If for some particular reason a coin that was ranked 20,000 were to just go all the way up to number 1, it would be the most value. You would gain the most gains, right? So you can see Chainlink was down, came up, shot up to $50, came all the way back down to $5. You could have got in a Chainlink back in 2019 for $2.48. Myself, I bought in the Chainlink at around $4, around the 2020 range, around here, around 2020. So I bought in a Chainlink around here, and I held on to them. I had about 400 coins. So when these went up, I made a decent amount of money, going from $4 to $50. Okay, so that's kind of one kind of opportunity you want to look for. And right now, if you wanted to compare it, you could say, well, that opportunity is back, because it's back to $5. It's really close to where I bought into it back when I first bought into it. Remember, I sold it at this top up here at around $50, 48, 49. It was close to 50. I think it might have even touched 50 at a brief moment, but either way it go, I sold it up there, and then from here it just came back down. So if you hadn't sold up here, then you just missed it, right? You just totally missed your chance to get out. And buying back now would be great. I could buy another 300 or 400 coins and be ready for the next time it goes up, if it goes up, right? Let's talk about what is Chainlink. So clicking on their white paper takes us here. It says we can download their white paper, and we click that, and then we end up on this white paper. So we can scroll down, and for the sake of this video, there's absolutely no way I'm going to be able to go through this whole white paper to show you what this company is capable of, because this company, this particular project is extremely complicated. To kind of give you an idea, Chainlink is intermediary. It's like the kind of coin, the technology kind of ties together other networks. and it manages data from one blockchain to the next. So if you think about the way blockchains are designed and what blockchain is, it's basically this picture right here, a blockchain, and then you have your web server and you have basically your information. And what happens is this information needs to get from the web server to the blockchain, and it needs to be decentralized, because otherwise there's a centralized entity holding the information in between, and we don't want that. So Chainlink is the decentralized data aggregator, basically, that connects to blockchain to blockchain to blockchain. Now, even though this is only pointing to one blockchain, this could be pointing to Ethereum, this could be pointing to Polkadot, this could be pointing to Cardano, this could be pointing to another blockchain. So as you start creating this picture of how many different blockchains it connects to, you can eventually see how the way that this project is designed, it's designed to share data between different blockchains and to try to keep this data as accurate as possible across these channels. So that, as an example, price feeds is one of their services that they offer. Now, price feeds is basically, you're trying to buy a coin or you want to buy something online. You need to know what the price of that of the actual item will be in terms of cryptocurrency, the dollar value on top of the cryptocurrency value, so that you won't be sending more money than what it actually costs at that moment in time. So if you're going to be buying something and it's $10 in USD, you want to know what $10 is in Ethereum or in the particular coin that you're using. And you don't want it to be wrong. You don't want it to say it's $10, but it's actually 11, or that it actually went down and became 8. So whatever the price actually is, you would like for it to know that. And so that's the service that Chainlink offers. It's an oracle. It shares and it gives transactions and data and shares that information across multiple blockchains. Now, when you think about that, that's just like on Web 2, that's considered to be something like what an API does when you connect a website to an API, or it's basically like the call center, like the data call center, a data center. It shares all the information. So Chainlink is the leader in that in the field, in its space, in doing this very thing. So if I was looking to invest in a coin and I was looking to pick a coin that seemingly was an unstoppable technology, that seemed like it had a great use case and a great utility, I would say Chainlink would be one of the best ones, because Chainlink is undoubtedly a technology that the whole cryptocurrency industry needs, or it would fall apart. And I'm saying that because obviously if you were to remove the service and technology that Chainlink offers, there would be a lot of things that would just stop working. There wouldn't be price feeds, there wouldn't be decentralized data, there would be a lot more issues with information moving around from blockchain to blockchain. Now, there's obviously other coins, other projects like Chainlink that exist, and you would have to do your research to figure out who they are, or you could always request in the comments below, and I'll make a video about all the oracles, and I'll probably make videos about all these different types of coins. But just so you can kind of see the point here, is that if I had to choose between picking a project like, if I had to choose between a project like Doge that was invented to be a joke versus a project that was invented to be, all the wiring and all the infrastructure for the whole crypto market, it becomes easy choice to choose something that is actually a utility for the whole crypto market, a coin that every blockchain is going to want to use and need, versus a coin that's meant to be a joke. You know what I mean? So for me, that's when you're doing research and you're learning more about the purpose of these coins, that's when you learn that, okay, some of these coins were meant to just be for fun, and some of these coins were super serious when they were being invented, and it took all kinds of technology, proprietary patents and everything to invent the technology. Different industries will have to work with a company like Chainlink Labs to, tie into the Web3 space and to be able to integrate their technology with Web3. So if there was one coin I wanted to have in my wallet, it would be a coin like Chainlink. Now, as you move down the list, you got Monero, which is a privacy coin, and you got other coins that are duplicates of other coins. Like Ethereum Classic is basically another version of Ethereum. It's a hard fork that was hard forked. So a hard fork is a significant change to the rules or protocols of a blockchain network that is not backward compatible. So this means that after a hard fork, the network splits into two separate chains, and one that follows the new rules and one that follows the old rules. So hard forks are often used to introduce new features to fix security vulnerabilities in a blockchain, and they can also be used to reverse the effects of a hack or other malicious activity. So back in the day, Ethereum was hacked and they needed to get people their money back. So this was back when it was centralized, more centralized than it is today. They did a hard fork, and half the community did not want the hack, did not want them to roll back the blockchain to before the hack, and the other part of the community did. So when they did the hard fork, the community split into two, and you have two different coins now. The Ethereum Classic is the first Ethereum. Okay, this is the original Ethereum, and Ethereum is actually the second Ethereum, the one that forked and became the new Ethereum. Then Ethereum became a merged Ethereum when it basically forked again and became the new Ethereum that it is today, making a new Ethereum. The old Ethereum is actually the proof of work Ethereum, which is actually the old blockchain that is still operating as the proof of work Ethereum blockchain. All right, guys. So if you like all this information you've gotten so far, make sure you smash that like button and drop any comments if you have any questions. You can also put timestamps in there for any questions, and I'll make a follow-up video to this video to answer any questions that you may have. So after you've been able to learn and do your research on tokens and coins, and you figured out what you want to do, you then want to have an investment strategy. You want to think about your investment goals, your risk tolerance, and your financial situation. And this will help you decide how much to invest and which cryptocurrencies to consider. There are many different investment strategies that can be used, and the most appropriate strategy for a particular investor will depend on their financial goals, risk tolerance, and other factors. But here are some common investment strategies. Okay, so you have diversification, and this involves investing in a variety of assets in order to spread the risk and potentially reduce the impact of any one investment performing poorly. Now, diversification can be achieved by investing in different asset classes and or different categories. So when we're dealing with crypto, the way that would work in this case, just want to show you. So we already went over the fact that there are four types: payment cryptocurrencies, your utility tokens, stable coins, and CBDCs. Those are going to be government centralized banked tokens that will come out in the future, or are already starting to come out in certain countries. And the government creates its own digital currency and then wants you to use that in replace of its actual normal currency that they normally have. Okay, but just to kind of go over these different kinds, you got your utility tokens, your service tokens, your finance tokens, your governance tokens, media and entertainment tokens, and then your non-fungible tokens and NFTs. Now, if you were to diversify, you would have so many of each, right? You'd have most people say, and I'm not saying that this isn't financial advice, of course, but that they put majority of their money into Bitcoin, maybe 30 or 40% goes into Bitcoin, or even 20% goes into Bitcoin, and then 20% goes into your utility tokens such as Ethereum. You would then start to shrink that, and maybe 10% goes into service tokens, 10% could go into finance tokens, exchange tokens, or you could put 5% into governance tokens and 5% into your media or entertainment tokens like metaverse tokens, gaming tokens, and then you'd have 5 or 10% that goes into NFTs, and then you'd have the other 50% of your funds are just sitting in stable coins, earning some type of yield for you, and that would be a diversified. That would basically be a diversified crypto portfolio if you're doing it just as a crypto portfolio. Normally diversification still means that you're going to put some in stocks, some in bonds, some in real estate, some in oil or commodities, things like that. But just in terms of cryptocurrencies, that was a basic diversification. Now, depending on your needs and your goals, you will have to determine your own diversification or speak with a financial advisor to determine what you should do. But as far as other investment strategies, you have, and we have made a video about this one, so I'm going to post that video up here on the top corner. Dollar cost averaging, which involves investing a fixed amount of money at regular intervals rather than investing a lump sum all at once, because this can help smoothen out the impact of market fluctuations and potentially reduce the risk of buying at the wrong time. You also have your long-term investing, which I made a video about as well, which then involves holding on to investments for an extended period of time, typically years, several years or more. This can be a good strategy for investors with a long-term horizon. So when I did the GameStop trade, a lot of people on this channel was present when I first advocated that I was going to buy GameStop while it was in the middle of almost going bankrupt. And I had this hunch that the project GameStop was going to turn around and go from $3 back up in value. So as a long-term strategy, I spent 6 months to 8 months buying the same stock, consistently buying shares in GameStop, which could be considered the same strategy if I believed that, say for instance, if I believed that Bitcoin was eventually just going to go back up to 65,000, then looking at this chart here, I could determine that this would be a good price for me to start buying and holding long term, and I would continue to keep buying Bitcoin at this price until eventually it starts to move back up again. So that's a long-term strategy. But even longer would be assuming that Bitcoin's gonna probably hit $1 million in 10 to 15 years, 30 years. So you would be buying the Bitcoin specifically to hold on to it for that amount of time. That's a long-term investing strategy. The value investing is basically what I just said, where you are looking for undervalued assets that have the potential to increase in value over time. And value investors typically try to identify, coins with strong fundamentals and, maybe a strong management team. Like, a lot of these crypto coins have teams, or strong use case or strong utility. And also tokenomics are strong. And we're going to talk about tokenomics shortly. But you also want to find ones that are trading at a discount to their intrinsic value, so that you can get a good deal on them. The another strategy is growth investing. This involves looking for assets that are expected to grow at a faster rate than the overall market. And then there's also income investing. This involves investing in crypto assets that generate regular income from. And now there's been plenty of people saying that, how can a cryptocurrency, generate any kind of income for you? Now, I'm going to make a separate video concerning this particular topic, but just because you're deep into this video, I'm going to give you the answer right now. That there's a lot of coins in the market right now that have yield and can produce a yield. So your coins such as Ethereum, which is a programmable coin, all your programmable coins can do that. So Ethereum, BNB, your Cardano, your Polygon, your Polkadot, your Tron, your Solana, these coins can definitely give you yield. Now, a coin like Uniswap can also give you yield. Now, you're asking, how can that happen? So there's two ways that can happen. And either one, you're providing liquidity for projects, which just means that you're putting up cash so that people can trade against your coin, and they don't, because someone has to always have liquidity. You will make a percentage of the fees that come in from all the trades. So that's a yield right there. And then that yield will go to the investor who put up the liquidity. Another way that is done in that case then is the Ethereum gas fees. So we go back to talking about the Ethereum gas fees and what those are and why you would earn a yield from them. Ethereum gas fees are the fees that users of Ethereum network must pay to have their transactions processed and included on the block. Gas fees are paid in Ethereum. So I'm just going to pull up this article just to, from CoinDesk so you guys can see what gas fees are. So basically, these fees are used to compensate Ethereum miners for the energy required to verify a transaction, providing a layer of security to the Ethereum network by making it too expensive for malicious users to spam the network. That was the first Ethereum. So originally Ethereum had miners, and then these miners would then mine using the algorithm like I spoke of about Bitcoin. The only difference now is that Ethereum is now merged and it became a proof of stake protocol. And once it became a proof of stake protocol, it no longer needed miners. What it uses now are called nodes, and these nodes are basically the same thing. They're algorithms, but it allows different stakeholders of the Ethereum to run the network and validate transactions for the network, and then earn fees. So fees are being generated through the gas fees of the network that are being paid per transaction. Because of that, there can then be yield. There is still yield available. That yield comes from the staking of the coins, which then means the same as like basically the investment of the coin. You buy it and then you leave it in your wallet, or you insert it into a contract that then calculates how many coins you added, and then it pays you over a certain amount of time for having your coins out of circulation and in the program. So while it's in the program, you earn yield. That can be done on the blockchain, and it can be done decentralized. It does not have to be done through a centralized exchange. This is why I'm very sad for the FTX people who probably thought that they needed to keep their funds on an exchange to earn yield. You have to learn more about decentralized exchanges and also decentralized blockchains and how you can actually earn yield specifically through the actual blockchain itself, and not actually have to leave coins on an exchange. So I'm gonna definitely make a video about that. If you guys want a specific video, I'm gonna also link that to this video in the description after I make the video. It's not made yet, but I will. So make sure you subscribe to the channel for more information about that. Okay, once you figured out which investment strategy you want to go with, which is something you have to decide for yourself. If you're young, you're obviously going to want to take more risk. If you're older, you're going to want to be preservative of your capital. But, I'm not a financial advisor. You're going to have to figure that out for yourselves. But once you have figured out what your investment strategy is going to be, then we can move on to the next step, which is then choosing a cryptocurrency exchange. All right. So the cryptocurrency exchanges that exist right now that have not blown up are basically onboard ramps for you to get the cryptocurrency. Now, I wouldn't even suggest any of these after the FTX. I wouldn't even suggest any of these after what happened with FTX. But unfortunately, the only way you can buy cryptocurrency is by buying through an exchange. So you will always have to take a fiat onboard ramp. And by fiat, I mean you're going to take your currency in any country you're in, and you're going to have to take it to an exchange. That is how it is bought. It's the same way it's bought when you're buying stocks or anything else. So here's your list of exchanges. The most trusted right now is Binance, and the second best is Coinbase. So if you're in the United States, you most likely would be using Coinbase. They do have a Binance.us account if you wanted that, but Binance is the strongest cryptocurrency exchange in the world, and second best is Coinbase. All right, so what you would end up doing most likely is either connecting a debit card and buying your cryptocurrency through the exchange, or you would be doing this instead. All right, so I just wanted to show you what Coinbase looks like on the inside, because a lot of people may not be able to sign up for Coinbase or see it, but this is basically a crypto exchange. And what you do in here is you come in here after you signed up and got through the KYC process, which stands for Know Your Customer, which means you have to give them your ID, your phone number, all your information. Once you've done that, then you could come in here and you can then buy your coins or trade them. And so they got this big pretty blue button right here that says buy and sell. I'd hit that button, and then I could, use my bank account or use my debit card or whatever account I have to then pick whatever coin I want to buy, and then buy that coin. Specify how much of it I want, preview buy, and then it'll take me to the screen that just says, hey, you're going to use your bank, you're going to buy this much BTC, it's going to cost this much, you're going to make this purchase, there's a fee, $7.45, there's a total, you hit the buy button, and then booyah. Okay, so you buy it, and then once you have it, then you'll have $500 worth of Bitcoin sitting in your account. What we would do then is we would determine if we want to diversify that, or just leave it all in Bitcoin, or if we want to use that to pay a friend or whatever. So if you have money to send around the world, you could do that. Or if you wanted to just, invest it, hold on to it, then you would want to send that to your wallet. And the wallet I recommend is a Ledger wallet. I have a link video explaining what ledgers are. I'm going to leave that in the description so you guys can check out Ledger wallet, the review I did on it. And as well as there's a link in the description where you can then buy a Ledger wallet as well. So I'm just going to show you what a Ledger wallet looks like, and this is our Ledger. And you could click, buy the Ledger Nano X for $149 or the Nano S for $79. This would be like the best place to store your coins when you want to store them. You want to make sure about that. So we'll talk about that in a minute. But once you set up your account on Coinbase or KuCoin, you can then use that exchange to purchase your cryptocurrencies, and then you can also send those back to your own storage wallet where you want to keep them. So like I said, there are many cryptocurrency exchanges available. They each have their own fees and features and support of cryptocurrencies. Some exchanges don't have all the coins. Like this one does not have all the coins. Some of these coins that are present on this exchange, you can buy them here, but there are also coins on Uniswap that you cannot get in Coinbase. So if you wanted to buy certain coins on this cryptocurrency list, and you didn't know how to get them, one way is to first buy the crypto that you have to buy, and then you would look for the coin in this list, and then you would figure out what market has it, what exchange has your coin. And then once you find the exchange that has your coin, you would make an account at that exchange, and then if it requires coins, if you want to make a deposit, you can send the Bitcoin to that exchange and then exchange it into the coin that you wanted, and then send that coin from that exchange back to your wallet. So it's a lot of steps, but that's because some of these crypto assets are not available in all of the exchanges because of protections. So Coinbase may only hold the coins they feel are safe or safe enough for people, whereas other exchanges hold other coins depending on what their criteria is. So you'd have to learn more about that, research, and compare several exchanges to find the one that meets your needs. Now, so as far as setting up an account and completing necessary verifications, you're going to make sure that you did that. Like I said, each exchange has its own KYC process, and most exchanges will require you to complete that identity and security verification, such as two-step authentication. They're going to ask you to give them your phone number, and they're going to text you and all that good stuff. And so once you've done that, you can start trading. All right. And like I said, you're gonna have to transfer funds to the exchange. You will need to then transfer those funds from your bank account or another financial account to exchange in order to buy the cryptocurrencies. So once you've transferred those funds to the exchange, you can then buy, like I just showed you in here, where you could you can finally transfer your funds into the exchange, and then you can then, after you have them, then you can convert your coin into whatever coins you want to convert them to. All right, so some people might not want to buy coins, but they want to be prepared to buy them, because sometimes it does take 2 weeks for a coin for a transaction from a bank to clear. So if you know that you're interested in investing in something, but you're waiting on the price to go down, don't wait to the last minute to put the funds in there. You can actually buy a stable coin for now that will still keep your funds at $1 or at at a certain price. So you could say, for instance, if you wanted, you could pick, USDC and just, put, you could put $300 in there, and then it will be $300 once it gets in there, so that it doesn't, as you can see. So if I bought this, it would be 300. There would be no fee, and it would just be 300. So all you're doing is taking $300 and turning it into $300 worth of USD stablecoin from Coinbase. Now, Coinbase owns USDC, or the company that owns Coinbase also owns USDC, one of those. So that's basically the coin that they use. So they pay you an APY if you hold that coin on their exchange. All right. So that's how you get, that's exactly how you get the coins over to the exchange. It's how you transfer them. That's how you hold them on there. And once you buy your cryptocurrency, then you'd be ready to choose the one you want to buy. And that's why you need to do your research and figure out which one of these coins you want to buy based on the research. So as you do more and more research, like I said, on my channel, if there's any particular coins you want to go over or anything like that, I'll have my favorite picks and things that I'm looking at. But you guys are going to always have to do your own research, because no YouTuber can ever tell you what is the right thing to do with your money. It's your money. So you have to make the right choice for yourself. But once you choose the one you want to buy and you have the funds available on exchange, you can browse the available cryptocurrencies and select the one you want to purchase. Once you place your order, which I showed you how to do, you then follow the instructions, place the order, complete the transaction. And then after that, you're ready to secure your investment. So going back to the ledger right here, you have your ledger. You also have another kind of, you have other cold storage wallets. I'm going to, talk about those at a later date. But just for now, I have a link in the description. If you want to support the channel, you can click that link. It'll take you directly to here, so you can buy your ledger, and also you'll be supporting the channel. And so what happens, guys, is you get you a ledger. This ledger holds your private key, which is the keys that you created when you made your wallet. If you haven't made a wallet yet, then let me show you some wallets. So this one's called Coinbase wallet. Okay, now this is not the exchange. This is actually a decentralized application that allows you to store your coins on the wallet. On your phone, you would download this wallet, and then you would be able to either create an account, and once you created that account, you'd be able to add your coins to the wallet and see your funds inside that wallet. So whenever you have made your purchase on the exchange, you would then send your coins to this wallet. So as you can see in this diagram right here, he has Ethereum, he has Optimism, he has Solana. So this is where you want to store your coins when you are finally done with your purchase. You know what I mean? So once you've made the purchase, you don't want to leave the coins on the exchange. You want to send them to your wallet. And once you have these keys, you own all of the assets. No one else has access to them. So you can't call customer service and say, hey, something happened, because once you send it to this wallet, they have no control over that. There's also this wallet, Trust Wallet. I use both in different circumstances. I like to have two different kinds of wallets. But anyway, this is another wallet, does exactly the same things, exactly the same setup, except this wallet is by Coinbase and this wallet is by Binance. Or at least Binance owns Trust Wallet, which is the company that made it. So you can get Trust Wallet through that, and that is also something you're gonna have. Now I'm gonna leave links to in the description to the Coinbase wallet and the Trust Wallet, because I really highly advise that you remove your money from the exchange after you buy them, whatever coins you do choose to pick, and then you send them to your wallet. After that, you would want to then buy a cold storage wallet. Once you start having more than $500 worth of coins, and you don't want to be losing your money, then you want to buy these. You want to buy a cold storage wallet like this, that you would then send your coins to a wallet like this, so that no one ever could have access to it without having this actual device. So like I said, I'm going to leave a link in the description to this actual review I did, and then you'll be able to see exactly how that works and how that's going to help you to protect your funds in the future. All right, so so just to kind of recap on where we are from the beginning of this video, we talked about research and educating yourself on cryptocurrencies, which we were going to use the CoinMarketCap.com to do and do all the research. This includes learning about different types of cryptocurrencies. I showed you that there were 4 types: that payment cryptocurrency, utility tokens, stable coins, and then also service tokens, finance tokens, governance tokens. These are all just utilities, just different use cases which they have. So you guys want to learn more about those, you want to read these white papers. And like I said, I'm going to end up having to make a video specifically on how to read white papers. So make sure you subscribe to the channel so you won't miss out on the more basic videos that I'm going to be releasing. This is going to be a series of videos that I'm going to do because I can't possibly squeeze, everything there is to know about cryptocurrency in one video. So this is like the beginning introductory video for the series. And then as you guys follow along the series, there's going to be a playlist link in the description. You could bookmark and you can follow along and kind of, learn about the terms and things that are going on in the cryptocurrency from back when they first started, so that you can catch up and get familiarized with what's going on in the market moving forward. Because I notice a lot of channels now are talking about cryptocurrency, but they're talking about it from the from the now perspective and not going back in the beginning where you guys probably are starting from. So I hope this video is very informative, and like I said, smash that like button if it is. Then after that, we talked about the cryptocurrency exchanges, how to set up an account, and what accounts to set up. And just in case I didn't touch bases on it, if you want to pick an exchange, like I said, come to CoinMarketCap. You can click any one of these exchanges to go to their website. I didn't actually say that earlier, but I'll say it now. I will say that I don't exactly trust any exchanges below a certain point down here. Gemini is okay. You might have heard of crypto.com, but like for me personally, I don't trust any exchange. I actually don't see why you should trust any of them. I think of exchanges as pawn shops. You know what I mean? Like they're just pawn shops where, you go in there, they got gold, you buy the gold, you don't leave the gold, okay? You take the gold home with you. You don't buy an item from the pawn shop and leave it there, you take it home. So if you buy coins on exchange, take it home with you, don't leave it there, okay? Everybody who lost their money in FTX and lost their money in any of these exchanges like Voyager, they bought their coins at the pawn shop and left them at the pawn shop, man. And then somebody came and robbed the pawn shop and left the coins. They had the coins at the pawn shop, and then the guys took the coins from the pawn shop, and now the pawn shop don't got the coins no more. And the people are sitting there confused about, where are my coins? Where'd they go? And so, yeah, man, honestly, I think that that's what happened. That's basically what happened with every single time people just got their coins taken from the pawn shop. Okay, so don't do that. Grab one of these wallets. I showed you how to transfer your funds to the exchange so you could pick out your cryptocurrency, place your order, and then secure your investment by adding it to a decentralized wallet, Coinbase wallet, a trust wallet, and then getting yourself a ledger. Now, the video is not over. I just wanted to recap all the way up until that point so that we can get on to the next point, which is basically after you've done all that, then you're going to want to monitor your investment and then also start to consider diversification. So you're going to want to monitor your investments and consider diversification after you've, picked your coins and everything. And I guess what I mean is you don't want to just be buying all the same stuff, but you do want to learn more about it. When you do make a particular purchase, continue to do more research, learn more about the blockchain, learn more about the technologies that is these coins, and do more research and watch more of the videos on this channel so you can learn more about it. And it's important to regularly monitor your cryptocurrency investment and spread the risk around and make sure you're not all in one place. So I'm just showing you a dashboard from just a dashboard that kind of just doesn't really have anything in it right now. There's only $19 in Bitcoin in here, but you want to kind of go back and see how much you've been adding in there. And if you're doing the dollar cost averaging, you want to be able to see how much you're adding into your account. And you want to be able to see all your assets below here. And so once you bought one of these wallets, you can see that through the software, or even if you have the wallet like the Coinbase wallet or the Trust wallet, you'll be able to see your assets in there. That's basically what you want to do, and you want to make sure that you continue to read the news about the projects that you're involved in, and also as far as research, I could take it one step further by joining the communities. And by joining the communities, you can actually join in on their Discords. You can join in on their Telegram pages. You could follow them on Twitter. These would be other ways that you can do research and stay up to date on, the different investments that you're investing in and things like that, just so you won't fall behind on it. Okay, so you guys want to make sure that you keep up to date with everything, don't fall behind, and also continue to update your portfolio to make sure that if you heard some super huge bad news about a coin, go ahead and move out of that one and switch to another one. Now, I also want to let you guys know that I'm going to make more videos in the future about this subject. I'm going to touch bases on taxes, crypto taxes, how to handle those. We're going to talk about types of investments. We're going to talk about those nodes and the gas fees and how you can earn money from the blockchain. We're going to talk about different basic terms and different things that I could not touch bases on in this video, because it's, scope of this video was to just stick to the basics, to just give you guys a guide to go off of. And then the next video, and determined by the questions you ask in the comments, I'm going to make more content to clarify more things to help you guys out more. Okay, so make sure you subscribe to this channel, hit that like button, let me know what you think below, and I'm going to talk to you guys later. Peace.